Ladies and gentlemen, good day and welcome to the Vasa Denticity Limited earnings conference call to discuss the operational and financial performance for the fourth quarter of financial year 24-25. From the management team, we have with us Dr. Vikas Agarwal, Chairman and Managing Director, Mr. Sandeep Agarwal, Whole-Time Director, Mr. Gaurav Agarwal, Chief Financial Officer, Mr. Sunil Gupta, Consultant Accounts. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Vikas Agarwal, Chairman and Managing Director, Vasa Denticity Limited. Thank you, and over to you, Dr. Vikas.
Hello everyone. Good afternoon. I extend a warm welcome to Vasa Denticity Limited's earnings conference call for the financial year 2024-25, which ended on March 31st, 2025. Thank you for taking the time to join us today. The audited financial results and investor presentation for the year has been filed with NSE and are also available on our company website. I hope you all have had the opportunity to review the materials ahead of this discussion. Before we get into the financial and business performance of the company, which will be covered in detail by our CFO, Mr. Gaurav Agarwal, I would like to share a broader perspective on the industry landscape, our strategic priorities, and how we are preparing for the future. India's dental care sector continues to evolve rapidly, with strong tailwinds driven by rising oral healthcare awareness, increasing disposable income, and a shift towards preventive and aesthetic dentistry. We are also seeing new high-potential verticals emerge, such as implantology, aligners, and digital chairside solutions, creating wide spaces for organized players to lead. As we look into the future, we are building much more than a dental supply company. Our vision is to become the single go-to platform for every dentist in the country, whether they are looking to procure supplies that enable better patient outcomes or to upskill and stay at the cutting edge of dental science. Our aim is to build an integrated engine that powers the entire dental ecosystem, from procurement to digital learning, from chairside solutions to lab manufacturing. We are working towards becoming a full-stack dental partner, a single trusted platform that supports clinicians not just in running their practices efficiently, but in growing them with confidence. We are building for scale, for reliability, and for impact. At Vasa Denticity, our commitment to transforming the dental supply industry has never been stronger. FY25 was a year of expansion, a year of consolidation, one led both in scale and scope. On the logistics side, we continue to make strides to pave way for our future aspirations and to serve the dentist community better. Our warehousing footprint grew close to 58,000 square feet, including the addition of a new 14,000 square feet facility in Dwarka, New Delhi. In terms of digital transformation, we continue to improve our platform's responsiveness and user experience. As a result, we saw our monthly active users rise to over 4.8 lakhs. We are proud that our customer engagement remains strong, with a 70% repeat purchase rate, reflecting the trust and stickiness we have built in the ecosystem. We also grew our product portfolio significantly, adding new SKUs across categories, taking our total count to over 22,468 brands. Despite this scale, we maintained a best-in-class product return rate of a mere 1.8%, a number that speaks to our commitment to quality and operational discipline. Another highlight this year was the launch of SmileWorks, our own modern dental lab, which allows us to offer high precision crowns, bridges, and other prosthetics under one roof. This vertical integration enables us to serve dental professionals more comprehensively and strengthens our vision of becoming a full stack dental partner. All of these efforts are guided and reinforced by our core values: customer obsession, inclusivity, operational excellence, and accountability. Whether it's investing in technology, enhancing supply chain efficiency, or expanding our category offering, every decision we took this year was with a long-term lens and our future aspirations. While Gaurav will share more details shortly, I would like to acknowledge that our aggressive investments this year, particularly in infrastructure, talent, and brand visibility. As a growing company with long-term aspirations, we have made a conscious decision to front-load investments, particularly in infrastructure, inventory, people, and brand building. These decisions have had a near-term impact on certain financial metrics, including the working capital, the cash conversion cycle, and the profitability. Inventory levels rose as we expanded our SKUs depth across new warehouses. Gross blocks saw a significant increase as we invested in high-capacity warehousing, digital lab equipment, and platform scalability. At the same time, our cost base grew in line with these expansion efforts, particularly around hiring for leadership, marketing, and setting up increased sales capabilities. While these shifts may cause some temporary margin compression, we view them as essential building blocks for long-term value creation. Our focus remains on driving capital-efficient growth, and we expect operating leverage and margin normalization to become visible in the future quarters as these investments begin to yield returns. To our investors, we understand that rapid scaling comes with considerations around sustainability, efficiency, and return on investment. I want to emphasize that we are deeply mindful of those expectations. We are balancing ambition with discipline and growth with governance. We have built the foundation, logistics, tech, and talent, and are now focused on turning these into enduring competitive advantages. The market is large, the opportunity is real, and we are prepared to lead. To our team, I would like to thank you for your dedication, agility, and belief in your shared vision. And to our shareholders, thank you for your continuous trust. With this, I would now like to hand over the call to Mr. Gaurav Agarwal to take you through the detailed financial and operational performance of this year. Over to Gaurav.
Thank you, Dr. Vikas. Good afternoon, everyone. I'm Gaurav Agarwal, Chief Financial Officer at Vasa Denticity. Thank you for being with us today. Following Vikas' remarks on the strategic directions of the company, I'll take a few minutes to walk you through the financial performance of financial year 24-25 and share some context on how we are thinking about the numbers and the path ahead. We closed this financial year with revenue of 251 crores, registering a 45% growth over the previous year. This performance was supported by strong order volumes across our platform, consistent customer engagement, expansion into new product categories and geographies. Total orders for the year stood at over 5.36 lakhs, supported by a growing base of active users and returning customers. On profitability, EBITDA for the year stood at 24.9 crores, up 21% year-on-year with margins at 10%. Profit after tax was 16.9 crores, growing 13% compared to financial year 24. While we saw steady profit growth, margins were comparatively softer, reflecting the investment-heavy phase we are currently navigating. This includes platform upgrades, talent onboarding, and strategic brand building initiatives, each of which has been made with a long-term view, as also mentioned by Dr. Vikas. One of the biggest challenges this year was in our gross block, which grew significantly from 1.4 crores to 14.8 crores. This increase was driven by capital expenditure related to the setup of our centralized warehouse in Dwarka, new Smileworks lab equipment, and digital infrastructure. These assets will play a central role in helping us drive both scale and operating efficiency going forward. Similarly, our inventory balances rose to 53.7 crores from 34 crores last year, reflecting our efforts to expand SKUs coverage and regional stocking to improve service levels and reduce delivery timelines. Naturally, this did put some pressure on our cash conversion cycle, but its trade-off was expected as part of our readiness to support faster growth and higher fulfillment standards. We are actively working to streamline inventory turns and improve operating leverages through better demand forecasting and supply chain automation. With the expansion phase well underway, we expect to shift more focus towards efficiency, margin recovery, and return on capital over the coming quarters. We are also pleased to share that during the year, we were awarded a BBB stable rating by CRISIL. This reflects our financial discipline and put us in a strong position to access strategic capital should we choose to do so. As of now, we remain sufficiently capitalized and focus on generating internal efficiencies. We are entering financial year 26 with a strong foundation, a robust customer base, and an expanding product and service portfolio. While we are not providing formal guidelines, our focus areas are clear: driving sustainable growth, improving profitability through operating leverage, and maintaining strong financial hygiene. To conclude financial year 25 with a foundational year, we scaled responsibly, invested where it mattered, and created a new level for long-term values. As our recent investments begin to settle into our operating rhythm, we expect to see improved efficiency and compounding returns. Thank you again for your continued trust in us. Passing it to Dr. Vikas for further updates.
Thanks, Gaurav. FY25 proved our model can scale profitably. We are confident of compounding faster than the underlying dental market for the next several years. With that, we open the floor to the question. Over to the moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Siddhant Dand from Goodwill. Please go ahead.
Yeah, hi. My first question was regarding our inventory. So, what levels do you expect it to go in this financial year at peak? And my my follow-up to that would be, how much of our inventory in our books would be more than a year old, and how much inventory impairment or inventory expiry happened in this financial year?
Hi, sir. Thanks for your question. This is Dr. Vikas. Can you repeat the three questions? I only recorded one question, inventory level.
Yeah, so what is the peak inventory level do you expect in this financial year? And could you give the inventory data for the previous financial year? How much inventory was impaired and how much old inventory that we have, like more than a year old?
Yes. So, we think that we are already at the peak of our inventory level. And with the growth on top line, the growth in sales, in future, we expect leverage and the inventory levels to go down. Number two, around 8 lakhs worth of inventory was impaired last year, and around 1.8 crore worth of inventory is more than 1 year old right now, which is not expirable. We expect to liquidate that too If not, we will write some part of it off this financial year.
Okay, that's great. My second question was, what is our mix of our app versus website orders?
The number of orders from the app are higher than the other platform.
Okay, the app is higher. Okay, great. The new app seems much better. Follow-up would be like, what is our average shipping cost that we have per order? And now, because of our multiple warehousing, what percentage of orders need to be shipped from multiple warehouses?
So we are spending close to 4.5% on the logistics right now. And we aspire to dispatch around 80% of the regional orders from the regional warehouses. Currently, we are on the way to achieve that.
Okay. One last question before I join the queue would be, what percentage of your orders are delivered late than the promised delivery time?
Around 13%.
Around 13%. Okay.
Yes.
And what?
13% orders breach the SLA currently. Which leads to attrition of customers, and we are working on it, sir.
Hello?
Yes. Can you hear me?
Yeah. Mike, did you get my question?
Yes. I'm saying 13% of the orders breached SLA for last quarter.
No, how do you plan to bring this down was my question.
Sir, it is all optimization gap, communication error. So once we automate things, so we are on the way of automating a lot of things in the business. The 13% will go down to 6-7% within this financial year. This is what we expect.
Okay, great. Thank you.
Thank you.
Thank you very much. The next question is from the line of Swaraj from Perpetual Capital Advisors. Please go ahead.
Hi. Thank you for the opportunity and congratulations on the great set of numbers. My question was gross margins, what we saw in quarter 4. Is this the new normal? Like, what about the change? And how do you expect gross margins to grow forward? So what exactly is driving the transition from 23% in quarter 1 to 33% in quarter 4? That was my first question.
Thanks for your question. Gaurav, would you like to take this?
Yeah. Hi, thanks for the question. So, we are expecting gross margins to be in the range between 26 to 30% going forward. This time it is 30% because we are more focused on high value equipment where we are getting slightly little margin. Secondly, our own brand sales has also increased where the margins are slightly higher. So we are expecting to maintain same percentage going forward also. So the margins will be in the range of 26 to 30%.
Okay. And what was the reason for higher other expenses this quarter? So what were the components that were high this quarter, and how do we expect to go to see them going forward?
So from the last financial year and this quarter specifically, we have invested a bit in our human resources, infrastructure, our tech stack, and we expect like this will give us a very good return going forward, and these expenditures will be stabilized and will come down with the increasing top line.
And we reported 21 crores in capital expenditure this year. So can you break down between the tangible and intangible components, and what could be the estimated useful life of those capitalized assets?
So we have invested heavily on our tech part. We have upgraded our website. We have upgraded our app. And we are creating different modules also, which is making our app and our website robust. Besides, so if we break it into tangible and non-tangible, so it will be somewhere around like 14 crores intangible and 8-10 crores tangible assets.
Okay. And just last question on Smileworks. So how big could Smileworks could be, and how much equity do we currently hold in Smileworks, and who holds the minority interest? And if possible, the gross block for Smileworks as well.
So we hold 60% shareholding of Smileworks, and 40% holding is with two doctors who are previously running this lab. So we have taken over this lab. This is a running lab which we have taken over, and we have remodernized the complete lab and invested almost like 3 crore rupees in it. We are, what is your next question, sorry?
My next question was what is the current gross block on the Smileworks? And how much increase in other expenses is it attributable to it?
The current gross block of Smileworks is 4 crores, and we are expecting to increase to invest another 4-5 crores in the lab going forward.
Right. And how do we plan to expand the sales for Smileworks and those internal scanners that we just launched? So are we looking to provide it as a service or as a product solely? Like, what are the plans on those?
Can I take this?
Yeah.
To expand the sales of the laboratory as well as the scanner, we are going to offer the scanner as a service and would like to bundle the scanner with the lab packages. Right now, we are serving only the Delhi market for Smileworks, and we are at a particular run rate. We expect around 5 to 6x growth in that run rate within this financial year.
Okay. Thank you so much.
Thanks a lot, sir.
Thank you very much. The next question is from the line of Ishpreet Kaur from Relax Capital. Please go ahead.
Hi. I would actually like to understand the inventory model a little better. So, how is the orders placed for the inventory for us? Is it like a little back-to-back, having some kind of an understanding with the dentist, or is it like in general that the orders are placed for inventory?
Currently, the orders are placed by doctors as and when they require. We have not launched the subscription model yet, which we are about to launch, where they can subscribe to the most commonly used products for every month.
Okay. So the inventory is in your books, and then as and how it is ordered, it is just used.
Inventory is in our books till the time we dispatch the inventory.
And generally, is there a aging of the products that we have in our inventory? Like one, you mentioned that more than a year old is 1.2 crores. But is there something that you also have that has a smaller shelf life?
Yes. The 10% of the inventory is perishable, expirable.
Okay.
And for all the inventory, the aging is recorded. It is on our BI system. We can track all the inventory from day one to the day it is there in our inventory.
So the inventory management system is developed in-house, or have we taken any software for it?
A part of it is in-house, coupled with already available software in the market.
The line for the participant has been disconnected. We'll move on to the next question. The next question is from the line of Parikshit Kabra from PKD Advisors LLP. Please go ahead.
Hi. Thank you for the opportunity. The first question might be a repeat from your opening remarks. I joined a couple of minutes late. The revenue growth this quarter has been less than historical trend. Do you have any commentary around that?
The revenue growth in the last quarter had a higher base with the year-on-year level. So we expected around 70 to 75 crore turnover in the last quarter, and we are happy with that.
I appreciate that, but the base was higher last year for any reason?
So in the last quarter, generally there is a higher trend of sales. We have seen that over the years. It might be due to doctors buying more at the end of the year to save on taxes or increase demand from the patient.
So because the reason I'm asking is because I'm unclear if it's a general trend that every year the last quarter is usually higher, then on a year-on-year basis, we should still expect a similar growth, right? Or are we saying that going forward we are expecting a 25% growth as the benchmark now?
Actually, sir, it is, we don't track our growth quarter to quarter internally. We track it monthly. Sometimes, one quarter is good, one is not that good. Overall, what matters is what categories perform, how many new customers were acquired, what was the average order value. So there are a lot of different metrics we track, and I got your expectation. We'll work on it, sir.
No, that's fine. I'm just okay. Did I also hear you mention at the start of the call that you are not going to be providing guidance for the next year?
No, I didn't say that, sir.
Okay, sorry. Then I'm mistaken. Is there any guidance next year, sir?
Sir, your voice is not clear. Can you please repeat?
Can you hear me?
Yes.
Yeah. I'm asking, is there any guidance you're providing for the next financial year?
No, sir. We have not given any statement on the thing.
Okay. All right. All right. Fine. Thank you.
Thanks a lot, sir.
Thank you very much. The next question is from the line of Pawan Kumar, an individual investor. Please go ahead.
Hi, Vikasji. Yeah, Vikasji, my first question is regarding SmileWorks Lab. Is this sufficient to have one lab for now based on our demands in Delhi? And for how long do you see meeting this lab, the demand?
Sir, it is not sufficient to supply to the whole country with one single lab. We might need to have some milling centers in the different cities, tier 1 cities of the country.
Okay.
Right now, we are only fulfilling the needs of Delhi, and there is a huge scalability potential in the lab business.
So you mean to say do you have some plan in future to have multiple such labs in multiple cities?
So we think so. We think so that as we grow the lab, there might be need of milling centers, not the design centers, just the milling part of the lab in different cities so that we can supply faster.
Okay. Thank you. The next question is, do you plan to do any equity dilution in coming years? If yes, then how much or what is the plan?
Sir, as of now, there is no plan.
Okay.
If there is any such things happen in future, it will be purely strategic.
Okay, got it. The next question is, how much CapEx do you plan for FY26? And what will be its source of the CapEx?
Gaurav, would you like to take this?
Yes. So hi, we are committed to keep on investing in our technology and upgrading our infrastructure wherever needed. So there is no specific number we can put up presently, but we have sufficient capital in hand. So wherever we need to invest, we keep on doing that.
Okay, thank you.
And just to add to this answer, we will keep it asset light this year. There will be some automation modules being built, and there will be no new large warehouses will be opened this year. Although we plan to open some service centers. We have opened one service center recently in the South India, and in future we plan to have some service centers. Apart from that, no big capex plan.
Okay, thank you. There is one more question, if I may. Where do you see the company in next, let's say, 5 years? Any broad guidance in terms of revenue or footprints? I know it's a very generic question, but just want to know your thoughts.
I see Vasa Denticity as a full stack provider to the whole dental community of India. That includes anything dental which a doctor requires, which a dentist requires. We want to make it accessible, affordable for the doctors. And I see a much larger company in next 5 years.
In terms of revenue, for example, can you give any ballpark number or something?
Sir, I see some multiple growth in the revenue in next 5 years.
Okay. All right, thanks. I think that's all for now. I will join.
Thank you very much. The next question is from the line of Vedant Bagre from Clearview Capital. Please go ahead.
Hi, thanks for the opportunity. My first question is that how do you think about the sustainable profitability levels in the business? Say, like you said, 5 years down the line, a certain revenue target, but what would be your aspirational profitability target?
I have been profitable since the day I started this business and would like to be profitable in the long term. I see higher margins in the long term. Last year we spent around 6 to 7 crores only on experimenting on certain technologies and certain things, which if we would have not done, then the bottom line would have been much higher. But it is the time for us for rapid expansion and to try different things in the market. In the long term, I think we will be able to consolidate the profits. The margins look higher to us in the future and higher profitability.
Got it. In terms of margins, I got it. And in terms of capital requirement, for example, like what would be the sustainable inventory days that you think you will be able to achieve 5 years down the line?
Sir, today at a 250 crore level, I am utilizing around 53 crores worth of inventory. When I do 1000 crores, I don't think I'll be needing 200 crores of inventory. I think we'll be using 100 to 110 crores of inventory. So I see in the long term, the requirement of inventory will be reduced to nearly half.
Okay, thanks. And the last question, I just wanted to understand like your thought process when you went for an IPO, like why did you go the public route rather than raising funds from VCs? What's your thought process on, when you...
Yes, this is a good question asked. Actually, we were not much aware of the financial world. I am a dentist, and my co-founder is a software engineer. So we did what we thought at that time was correct, and we don't regret it. We are happy what we did. And there has been some wonderful investors with us, and now we have, very good foreign institutional investors with us on board. So we are getting good support, and this way of growth, this way of raising capital also looks good to us and most of the companies like us at our level.
Got it. Thank you.
Thank you, sir.
Thank you very much. The next question is from the line of Akshata Talisara from INS Alpha Investment Management. Please go ahead.
Thanks for the opportunity. I was just going through your PPT and certain metrics like your unique customers or order per customers, and therefore the number of orders have slowed down in FY25. Also, I'm seeing the retention ratio has fallen from 76 last year to 60% this year. So just want to know how you are thinking of these metrics. Do you think it's all it's a bit temporary? I mean, the kind of expansion you've had, which was more back-ended, or how do you think of these four metrics going forward?
Ma'am, I think currently our delivery timeline and our customer service is not up to the mark. There is a lot we can do in this year to correct that. Once the delivery timelines are under 2 days and the customer NPS increases, we see a strong momentum in reorders, in the wallet share of that particular clinic, and the customer satisfaction. So these are very important numbers which are given in the presentation by us, and we think they will improve with time.
Okay, so these guys would have gone back to the local vendors, and you're saying that if it falls down below 2 days, then they'll probably shift back to your platform.
Yes, in the time of e-commerce where Blinkit is delivering in 10 minutes and Amazon is delivering next day. So the mindset of a customer is to get it faster. And we have to change with time to faster delivery so that we live up to that expectation.
So this 4.5% logistic cost that you're talking about, where can this number go to?
When can this number?
Where can this number go to? Because you want to do it much faster, right? So I'm assuming it will be more, the faster deliveries than the usual ones. So this 4.5% on logistics can increase going forward.
So recently we have shifted a lot of our logistics on Blue Dart, which has a better SLA compared to rest of the market. This is what we think with our experience. So with that, this number can go up to 5.5 in future, but it will give us return on the other sides of business. So it can fluctuate between 4 to 5.5 in future.
Okay, and your revenue per order has significantly gone up. Is it because it was large equipment that you were talking about? And how do you see this going forward? Like it will stabilize at 4.6 thousand, or how do you see this?
I think it should go higher in future because we have started selling high value equipment, some SKU, some capital equipment for the clinic, laboratories. So once we take out an average of everything, the numbers I think will grow in future.
Okay, and warehouse expansion has been quite rapid, right? Like you've gone from 16,000 to 34 and now 58 almost. Do you think we've optimally utilized the previous square feet? The warehousing capacity. Have you optimally utilized all of it, and then we've come with this new? Almost doubled it this year again.
We have utilized some of the warehouses well and some not that well. We are on the way to optimize them completely. So we are not going to open any large warehouses in India in near future. Like, as of now, it is not decided, and the target is to optimize per square feet of every warehouse as much as possible to dispatch the maximum order of all the regional warehouses from the regional warehouses itself. That is the target now.
Okay, and one last question on your CapEx. I think you said 4 crores on Smileworks is what you'll put in, some on service centers. So can you broadly, like, ballpark give a number here? Also, the one service center that you've put, how is that panning out so far? And the last question would be, how much did you make from placements in FY25? Hello?
Yes, ma'am. I got the CapEx part, the service center part. What was the last part of the question?
Placements for FY25, how much did we make from that?
Gaurav, would you like to take this?
Yes, hi. So I didn't get your last question. The voice is tracking. Can you please repeat that?
How much
Hello.
did we make from placements in FY25? Audible now?
Yes. So we have opened our first service center in Chennai, and we have opened a small showroom also there. We are planning to open 2 showrooms and service centers in the prominent part of India. Versus this, we are expecting to invest almost like 3 to 5 crore rupees for these showrooms and service centers across India. And I still didn't get your last question, ma'am. How much is the placement?
3 to 5 crores, you're saying for the 2 showrooms that you'll open this year?
For multiple showrooms across India.
Oh, okay. Okay, that's it. Thank you. That's it for mine.
Yeah.
Thank you very much.
To add to the last answer, multiple showrooms won't be opened in a go pan-India. We'll just see how the first one performs, and we'll open the next, and the one after that will also be based on the data and analytics.
Okay, any initial feedback on the one that you've already opened in South?
It is not the right time to comment on that because it's still in the initial phase.
Okay, got it.
Thank you very much. The next question is from the line of Nirjara, an individual investor. Please go ahead.
Yeah, hi. So I just wanted to ask, do we have any competitors online and offline? Do we have like big retailers who can come close to our revenue?
So online, we don't have a competitor of this scale or nearby. Offline, there are thousands of retailers, who make sales between 10 crore to 100 crore. There are a few who make sales beyond that also.
Okay, so I just wanted to understand what difference do we have from those bigger retailers? Like, is it just price point or like the products that we are offering? What's our USP?
That's a great question, sir. Thanks a lot. Our USP is not just the price. Our USP is the ecosystem we have built and the type of exclusive products we supply to the doctors. We have our in-house brands, which are developed and distributed pan-India. We have educational initiatives to upskill the doctors to make them understand how to utilize or how to use a particular procedure, to buy the whole armamentarium of a particular procedure together. And around 20,000, 22,000 products are available on at a single platform for the doctors with many exclusive products for which the doctor has to come to our platform. Then in the technology side, we have a microservices architecture, which is highly scalable and reliable platform. The whole company works on data analytics. So all the decisions taken by us are data driven. Most of the work in the warehouse, most of the decisions even in the warehouse are automated. So that can help us scale faster. Our delivery timeline on a national average is around 3.8, but in many cities it is next day and sometimes it is same day. So that is currently not available, for most of the doctors around the country.
Okay, thank you. I also wanted to understand, like with our vendors, what are the terms of sales and are we able to return the goods to the vendors?
Yes, we have agreements with most of the dealers to do RTVs, and on expiries also we have agreements with the domestic dealers. We track all the inventories we purchase from the local vendors and we return them on time if unsold and get them replaced with the fast movers.
Okay, thank you so much.
Thanks a lot.
Thank you very much. The next question is from the line of Manjeet Buaria from Solidarity Investment Managers. Please go ahead.
Hi, thank you. Dr. Vikas, am I audible?
Yes, sir, you're audible.
Dr. Vikas, thank you for taking my question. First I just wanted to appreciate the hard work which has been put in by the team over the last few years. I think it's a very commendable position we have reached now. There's just one question where I sort of wanted clarity. We have cracked getting our business to a healthy gross margin level, and I'm sure it will improve going ahead. Because we don't burn money or discount to earn revenues, right? So we have a very formidable position there. Given that position, why would we shy away from continuing to make aggressive investments below the gross margin line, right? Whether it is marketing, deepening our presence, doing more experiments, as you mentioned you did in FY25, because that would really accelerate the market share we'll gain from our unorganized competitors. So I just wanted to understand the trade-off which the management team wrestles with between improving the market share leadership and delivering a certain level of margin in the short term. Because I would have thought it's better to sort of keep investing a lot more aggressively for the next 5-7 years, given gross margins are good, and then the EBITDA margins will climb over a period of time.
I agree with you, sir, and I'm not actually shying away on investing on certain fronts. In marketing, the capital allocation was higher last financial year, but it was not as higher as we expected because ROAS was also important while deploying the fund. In the offline marketing, where currently 94-95% market lies, I think there we can invest more this financial year. And on the digital marketing front, we will continue to increase the allocation of funds.
Got it. So, you are not very concerned about the short-term margins, right? That's the clarity I wanted. As long as the investments are needed, you continue to do that. Because I thought from your opening remarks that, you wanted to deliver those margins faster in a way. Whereas I thought gaining market share would be priority.
Yes. Sir, to continue answering what I was answering earlier, right now margins are important for me, because I have to deliver it to my shareholders and investors. But at the same time, market penetration and market share is very, very important. And that is the reason we compromised on the profit this year to have a higher growth. And that growth is sustainable kind of growth. In future, we will not shy away on any investment if we see sustainable growth. this year, next year, and I'm totally aligned with your thoughts.
Okay. Thank you so much, Dr. Vikas. All the best.
Thanks a lot, sir.
Thank you very much. The next question is from the line of Keshav Kumar from Bruxon Investors. Please go ahead.
Hi, sir. Can you help understand the rationale behind Smileworks acquisition a bit more?
Yes. Sir, it is a vertical integration. The dental market has a clinical side and a laboratory side. So when somebody goes to a dentist and, after a root canal, mostly there's a cap which has to be placed on the crown. And the dentist sends that tooth impression to a dental laboratory, which is different from a normal diagnostic laboratory, and get the processes made, and then it is delivered back to the doctor. And then he places the crown on the tooth of the patient. So we were only supplying the clinical side of products to the dentist. Last year we started this laboratory so that we can supply the laboratory side of prosthetic work to the dentist, to our same set of customers. So I have 1 lakh plus dentists who are buying clinical products from me. To the same set of customers, why not supply the lab side of the product? So I don't have to market specially for that. I already have a loyal customer base. Why not provide them with more services? So that was the thought process while acquiring it. It was a already running laboratory for last 8 years. The founders were brilliant. We aligned with the vision and philosophy, and we decided to join him.
Okay. So, sir, this prosthetic market, how is it structured? How big is it?
So the dental laboratory market itself, the prosthesis market, it itself beyond 6,000 crores. And we were not doing anything in that market before last year.
But the approach for us would be to sell from Smileworks across territories, or we'll just be focusing on Delhi?
So we started in January 14, and we are consolidating in Delhi right now, and when we are ready, we will start delivering pan-India.
Okay. So deliveries can be done from Smileworks base pan-India, or we'll have to acquire companies like that, or we'll have to expand in other geographies as well?
No, it can be done from Smileworks itself.
Okay. And sir, how much did we spend for this 60% stake? And if you can put a number on, what kind of a manufacturing scale they have, how much they're utilized? Yeah.
So the manufacturing capacity right now is a certain number of crowns. We think that with the same setup which we have created, we can grow around 5x, and then it will require more capital infusion. And I think this is going to happen this year itself.
Okay. And this crowns capacity is how much of the overall products they sell? Crowns is what percentage of the revenue is the company had in the last year?
So Smileworks, majority of the work is crowns and implant-related prosthetics. I would not like to share any numbers of how much we are producing for trade secrecy reasons and competitive reasons. But I want to assure you that there is a lot of scale which has potential to grow this year.
So lastly, this 60% stake was for how much did you spend for it?
So the initial investment was 3 crores.
3 crores. Okay. Thank you, sir.
Thanks a lot.
Have a great quarter.
Thank you very much. The next question is from the line of Swaraj from Perpetual Capital Advisors. Please go ahead. Mr. Swaraj, please go ahead.
Hello?
Yes,
I'm
sir.
audible?
Yes, sir.
Hi. I just wanted to understand what was the rationale. I think you already have a warehouse in Delhi. So what was the rationale for setting up another warehouse near Delhi? I just wanted to understand that.
Thanks a lot for this question. This was something which nobody asked. Sandeep, you want to take this?
Hello. Yes.
Hello.
So, the earlier Delhi warehouse was not that operational anymore right now. That was totally used for the head office part. So the earlier warehouse which was there in Faruknagar, which is very far away from the airport. So actually the pickup that we have earlier was very high. So to reduce that, we have shifted the warehouse to Dwarka, which is very nearby to the airport. So via that, we can ship most of the parcels same day to a cut-off time of 7 p.m. or 6 p.m. Second advantage of the new warehouse is that we can ship a lot of orders in the Delhi NCR region same day itself, which is not possible with the Faruknagar warehouse.
Okay. Amazing.
So overall, this helps us in our strategy to deliver within 2 days national average.
Great. And the growth in monthly average users was 9% for there. I understand it was on a higher base from last year, and last year the growth was higher. But what is your outlook on the monthly active users, and are we more focused on monthly active user ARPU or a combination of both?
A combination of both.
Okay.
So almost all the dentists of India come to our platform to search products and see what's there in the dental market. But we are not able to convert all of them. Idea, we are trying to find how can we get all of the active users to buy stuff from us.
Right. Great. And technology additions, I think we had milling machines and dental chairs. I think we already had. So what new additions on the technology side have we done that is going to help the business?
So there are two things in technology, sir. One is our tech stack, the app, the website, and the code behind that. And the other is the dental products technology. So I think you're asking about the dental products technology. We recently launched dental 3D scanners, and dental chairs were launched last year. Milling machines, the metal printing machines are new. We have done 6 exclusive tie-ups last year, which will give results this year.
Okay. So on the margin fronts, I understand we are in the growth phase, but where do we, and we cannot, I understand you cannot give a number, but on the qualitative side, how do we see margins to stabilize, and any long-term guidance qualitatively?
Sir, we expect better margins. So we have not, we can squeeze, we can have more margins if we want to. Right now, we are not looking only on the margin. We are looking on penetration in the market and acquiring more customers and serving our current customers better. In the future, I expect the margins to grow.
Okay. Thank you so much. All the best.
Okay. Thanks a lot.
Thank you very much. Due to time constraint, that was the last question. I now hand the conference over to Dr. Vikas Agarwal for closing comments.
Thank you all for taking the time to join this call. I want to extend my heartfelt appreciation to each member of the Vasa Denticity team, our valued customers, creditors, banks, financial institutions, and all our shareholders. If you have any further questions or need additional information, please do not hesitate to contact our investor relations team. Thank you again for your time and participation. Moderator, you may please close the call. Thank you.
Thank you very much. On behalf of Vasa Denticity Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.